Jeff, it's great to see you. Thanks for the time today.
Morning.
One of the more constructive things you're pointing out is that the market is being discerning, and sort of unlike prior periods, you do think there's a valuation where the buyers are waiting, and when it gets there, they'll be ready.
Yeah, as we've talked about throughout January, obviously we saw a huge pullback in high growth tech. I think the one thing that's perhaps different, quote unquote, this time is if you go back a decade ago or even 2 decades ago when we had the dot-com crash, you didn't really have a floor for tech stocks. And what we see today is private equity firms like KKR or Thoma Bravo or a bunch of international players who will step in and actually want to buy these companies if they trade below some nominal value. We saw an offer, news come out about an offer for Zendesk, which is a terrific company in the service desk space. So we think there may be a floor, and you're seeing great names, companies like RingCentral, JFrog, even Zoom and RingCentral that are trading below 10 times next year's sales with high growth numbers north of 30%. So I think a lot of folks who follow these companies aggressively are looking at maybe January and early February as a good time to be picking these up, as long as you have a long-term time horizon. Every time I come on, I mention that. You got to have a long-term time horizon for these cloud stocks.
Yeah, I was going to say, is price alone enough to pull the trigger, given sort of the unanswered questions we have regarding the backdrop of monetary, fiscal, geopolitical policies all around the world?
Well, you guys have a lot of folks that are a lot smarter on those topics than I am. I think what we continue to see is really strong growth. If you look at Amazon, AWS a year ago or 2 years ago was growing at 30%, and sometimes in the high 20s. The last quarter, it was growing at over 40%. That's the largest player in the cloud space with $70 billion run rate of revenue. It's an incredible business. If it was independent, it's probably worth over $1 trillion on its own. So as long as we continue to see Microsoft, Google, Amazon reporting strong cloud growth, that should bode well for the rest of the sector. And then another category that we'd highlight we think is interesting in the long run is fintech. As the world shifts towards more digital currency, obviously crypto is interesting, but even just small business payments, companies like Square or companies that are in the lending space like Affirm and Upstart, I continue to be really bullish on those over the long run.
Yeah, Jeff, what about the possibility, though, that as stock prices come down, that has a demand effect on top of the sort of demand sapping effect that rising interest rates are supposed to have when they're meant to curtail inflation? Might that change the calculus somewhat? Because, yes, we can talk about how quickly the hyperscalers are growing at the top line, but part of that is because their customers are spending at a certain rate, which might be because, right, of the valuations that we've seen in the past.
Yeah, it's a great point, John. And I think, one of the things that's hard to get your head around, if we go back to 2000, and I was in Silicon Valley in 99, 2000, the majority of companies buying technology were other technology companies. I think what's different today, 2022, 23 going forward is every single industry is shifting to the cloud, right? You've got healthcare, automotive, government, shifting their infrastructure to the cloud. Accenture came out with a study a month ago or 2 months ago saying that only 12% of international bank spend is in the cloud. So we're still in the early days of that shift. I agree with you. We could see short-term pressure with interest rates going up, perhaps makes it harder for corporations to borrow and use capital that they might spend on CapEx. But man, I don't see a scenario where we go back to on-premise software. Categories like cybersecurity are becoming more and more important. And then if you think about that fintech category, heavily indexed towards small business, which arguably has been depressed during COVID. I'm on the board of a private company called Homebase. We saw 31% of small businesses had fewer worker hours between December and January. We've now seen that go up 6% between mid-January to mid-February. So I'm bullish on small business. That should benefit companies like Toast, Square, RingCentral. So that's a category that I think maybe is underrated.